I'm Deborah Borchardt, and this is your midday market update. Well, look at today. We have a rally going. Stocks are all in the green territory following today's jobs report. Looking at today's headlines, Twitter, after all the hoopla yesterday, the stock is down just a bit this morning. Groupon is higher after its earnings. And the Gap stores, hey, they had some people going in buying clothes. Their same-store sales were higher. Joining me now is Jason Weisberg from Seaport Securities. So, Jason, when we look at this jobs report, there's a lot of back and forth on it. Some people are going, wow, 204,000 jobs, that's great. And other people are saying, yeah, but look at all the people that aren't working.
Yeah, it's a good point. How much faith do you actually put in this data point? And I think that the investment community, for the most part, doesn't place a lot of credit in this data point, which has become very watered down. It's a number that gets continually revised, month to month to month. It's one number. It's one number today. It can be cut in half in a few months from now. So I think people take it with a grain of salt. So unless when these numbers do come out, there's a huge anomaly, I think people almost ignore them, sadly.
Well, that's a point I was going to bring up, because when we got the headlines right off the bat, before the market opened, the stocks were down because everybody thought, wow, this is a great jobs report. Here we go. We're going to start to taper off on the QE. So we sold off, but then it seems like once people read into it, they went, ugh, the jobs we're adding are part-time or low-paying. And we've also lost a lot of full-time jobs, and then all of a sudden we saw the buying come back.
I think that in the end of the day, when you pull the static out of the equation, and that's what these data points are, it's just pure static, people get to focus on the fundamentals of the companies they're choosing to invest in or pull their money out of, and that's what's really going to drive the market, at least between now and year end, until they reapproach the budget deal in the middle of January. And I think those that were lacking in performance this year are being forced to invest in stocks. And with the lack of liquidity that we currently see, other than the Twitter IPO and similar issues, it's really tough to buy stocks. And if people are chasing performance, it's going to drive the market up. Now, we can call it artificial, we can call it natural, but the fact is, when stocks aren't for sale and their buyers are around, stocks are going to go up. And I think that's what we're seeing in the market right now.
All right, well, they are going up, and that'll help a lot of people out on their 401k values. That's Jason Weisberg from Seaport Securities, and I'm Deborah Borchardt with The Street.